Hello everyone and welcome to my first morning report analysis videos of 2017 on Tuesday the 3rd of January with me, Rich Perry, market analyst at Handtech Markets. We've got a fairly sort of mixed open actually. You got a decent run higher on FTSE 100 in terms of equities, but European equities across the board a bit mixed. You had DAX and CAC open yesterday. They're mildly mildly lower on the DAX, mildly higher on the CAC. In terms of your Forex markets, it's interesting that we've had a bit of a turnaround on the dollar this morning. Let me just start you off with a look at some treasury yields and the reason why I think the dollar's turned around, because we've started to see the 10-year treasury picking up again, as has the 2-year treasury, and that has sort of led to the dollar continuing to rebound. That rebound it had yesterday, that rebound continued today, even though early on today it was looking a little bit weaker. As the European trading session has got going, the dollar has started to gain a bit of traction once more. That's turned around some performance against many of these Forex majors. The euro, for example, is lower, and also yen is lower. Now there is, however, a positive risk appetite going on today. We've got the manufacturing PMIs throughout the day, and what we have seen is the Cajun manufacturing PMI coming in for China ahead of expectations at 51.9. Now that was a positive and has helped risk appetite generally across the board. The commodity currencies are positive. The Canadian dollar, the Aussie dollar and the Kiwi dollar all trading higher against the US dollar today. That's also been helped by the oil price, which is also higher. The oil price is breaking out again, so that is coming as the sort of expectation that these production cuts through the OPEC, non-OPEC countries are going to be taking hold, and that is helping to drive the oil price higher today. So lots generally positive moves actually in these markets today at the moment, and it is a decent setup that we're seeing. We've got also the rest of the PMIs are out today. Now we've just had out the UK PMI for the manufacturing sector, 56.1. So that was well ahead of the 53.3 expected, and that is certainly helping to see cable rallying. You've also got the US ISM manufacturing today, and that's at 3 o'clock. That is expected to come in at 53.5, 53.7, depending on where you get your data from. But that is, generally speaking, that would be up to at the highest since early 2015. So that would be a strong number. So that would be again a positive for the dollar. So some decent dollar strength that we're seeing in terms of a rebound today. Now, in terms of my chart of the day, I'm looking at the Aussie dollar. Now, what we had seen in December was this breakthrough below 73 cents. Now that changed the outlook in my book, because that was sort of the completion of a top pattern. The big breakdown. That now what we're now seeing is 71.45 being seriously tested. 71.45 being these May 2016 lows, held through late December. But what I think is we're going to see is that this renewed dollar strength. Now, we saw the dollar strengthening yesterday. Aussie has been mildly stronger today, so that's slightly unexpected and against the grain a little bit, and certainly helped by the Chinese data. But I don't necessarily think this Aussie dollar strength is going to last particularly long. This chart on the hourly looks fairly much neutrally configured, buzzing between 30 and 70 on the hourly RSI, and I think rallies tend to be sold into, and what we have seen in the last hour or so is a stochastic sell signal on the hourly chart as well, on the hourly stochastics. So that is sort of suggesting that this rally is sort of running out a bit of steam. You've got that 72.50 or 72.45 area of resistance coming in there, and I think that generally speaking these rallies are going to fall over and retest the support of 71.50. If you break below 71.45, which is that May low, then you're looking at sort of support levels back from early 2016, 69.70 and 68.25 would be the levels there to watch out for. So some downside I think we're still going to be seeing, but I think I'd be selling the Aussie into strength. the outlook would sort of certainly improve above 72.45, but generally speaking, I think any sort of sell signal you get underneath 73 figure, I think that is a decent opportunity, because I think that 71.45 will be tested and ultimately likely to break down. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.